Hello and welcome to the Bullish Bear FX Academy. Today in this video, you will learn how to use the support and resistance effectively in order not to miss market opportunities and also not to fall prey to the market's manipulation. The support and resistance strategy is a very simple strategy but very effective when you know how to use it rightly and how to use it against the market's move. Now, what is support? Support in the market simply means an area where price finds strength to continue pushing to the upside. How to identify support in the market? In order for a support level to be confirmed as support, you need to find an area where price is being supported to push to the upside 2 times. Just like this example here, we have 1.1 and we have 0.2. In order to identify support, you need to look for an area where price is being supported in 2 different points. Here we have 0.1 and here we have 0.2. Now, when you find price being supported in 2 different points, that is called a support zone. Now the question is, if this is a support zone, what next do I do? It is very simple. In order for you to look for an entry position, you want to wait for price to come back down to that zone where you had the previous supports. In the Forex market, it is understood according to history that price would always go back to the upside when it gets to that support level. So, in order to look for your entry when looking at a support zone, you want to wait for price to come back to the zone where you had the support, and there you want to look for your entry in order to push to the upside. Now you must understand that the entry you want to look for from a support zone has to be a buy, which is also known as a bullish move. Do not forget that when the market is bullish, that means price is going to the upside. And when the market is bearish, that means price is coming to the downside. But I want you to stay with me because I will be showing you how to prevent the market's manipulation and how not to miss your opportunities while waiting for price to get to your support or your resistance zone. Now that we have talked about support, what then is resistance? It is easy for you to understand resistance if you have understood support, because it is just the opposite of support. So in order to find resistance, you want to look for 2 points on the top with price pushing to the downside. Here we have 0.1 and here we have 0.2. Now price pushed to the downside, came back to the upside, and pushed back to the downside. That means these 2 points above is a resistance. Just as support simply means finding 2 points on a ground level that pushes price to the upside, resistance also means finding 2 points on a roof level that pushes price to the downside. Always remember, you always want to wait for the second touch before you can approve it to be a resistance. Price cannot be a resistance until you have a second touch on your roof level. Now that price has pushed back down, how do we find our entry from the resistance level? You must remember that when trading from a resistance, that means you should be looking forward to selling and not to buy. As buy means bullish, which means uptrend. Sell means bearish, which means downtrend. So that means the opportunity you're looking for is the opportunity to sell. So in order to place an entry, you want to wait for price to go back to your resistance zone where you had your 0.1 and your 0.2. And there you want to look for a selling opportunity to sell along with price to the downside. And that is how to sell from a resistance zone. Now, there are many times in the market where we find out that the market manipulates and works against supports and resistance zones. And those are the times you want to be careful in order not to fall prey to the market's manipulation. But on the other hand, you want to be smart enough in order not to miss an entry opportunity. And that is what I'll be showing you in the next chapter of this video. If you are enjoying this video so far, kindly hit the like button. And if it's your first time on this channel, please hit the subscribe button and turn the notification bell on so that you don't miss out any single training from our channel. Now I'm going to show you how not to miss an opportunity in the market while you wait for your support or your resistance zone to be activated. Join me as we go into the chart. Now I'm going to show you how not to miss an opportunity in the market while waiting for your support or your resistance zone to click. This is a typical example of not missing an opportunity. What do I mean by not missing an opportunity? There are times when you find price create a first point of support and a second point of support. But if you observe, you would notice that price had broken through your support line. But if you observe closely, you would notice how price had broken through your support line and came even deeper. But does that make it an invalid support level? No, it is a valid support level, especially when you find price hits that line and going back to the upside, because that is how you approve it to be a support, an area where price creates a first point, second point, and goes to the upside. So in a case like this, how would you take this kind of trade? Now that you have approved it to be a first point and a second point support, you want to use what we call the square. The square shape helps you bring out a zone. And what is a zone? A zone is an area or a point where you are waiting to take your entry. Just like we have in the army barracks, we have what we call zone 1, zone 2, zone 3, and so forth. In each of those zones, you have different soldiers lodging there. They do not lodge there because they don't have a house. They lodge there because they have been posted there to camp and watch. So when you create a zone on the chart, you are creating an area where you are likely going to take your entry if you find any good opportunity. So how do we take an entry when price gives us such kind of reaction on our support level? It is simple. First, you want to zoom your chart. Secondly, you want to put a square starting from where the wick of the candle is to where the body of the candle ended. Put your rectangle and drag it to the future. After dragging it to the future, you want to wait for price to come to your zone. Now remember, this is now called a zone. So in between a zone is where you want to find your entry positions. Creating a zone for your entry is best when it's on a lower time frame, because this will help you not to have a wide stop loss when trying to take trades from your zone. So it is always important for you to make sure that your zone is not so wide that your account cannot bear. Now that we have your zone mapped out to the future, all we want to do is to wait for price to come back into the zone. The reason why we have mapped out our zone by calculating the wick of the candle to the body of the candle, it's because if price came here and created this pattern in the past, there is every tendency that there is money sitting right in that zone. So that is why you should look forward to taking a trade around that zone. Most oftentimes, when price create this kind of structure, it is usually a goal to win. So let us see how price would play out when it gets to our entry. Now we could see exactly what price had done. When price came into our zone, we can see clearly that price broke beyond the support line, going straight into the zone where we had the candlesticks, and that was where it found a good support to push to the upside. So that simply means this zone was a good zone to place a buy. So you could see that with a little stop loss, we were able to catch a good entry in between our zones to the upside, and that was a good profit. Now, not all the time this happens, but oftentimes when you get this kind of reaction, it's usually a go-to-go trade. You want to apply this also for resistance. Now, what I have just showed you is how not to miss an opportunity in the markets. And I said to you that I will also teach you how not to fall prey to the market's manipulation. But because this video has become longer than I expected, I would have to make that in another video. And this is why you want to make sure that if you haven't subscribed, you subscribe right now, and also turn on the notification bell so that you do not miss the next video. If you found this video helpful, kindly hit the like button, hit the subscribe button if you haven't subscribed, and turn on the notification bell. Do you have a question? Use the comment section, and I would love to use your question to create subsequent videos for your proper understanding. While you continue to train and practice and become more profitable in the markets, I will see you on the next video. Stay safe.